Hi friends, good week. How are you? How was your weekend? Well, I hope you enjoyed Barcelona Real Madrid. I'm recording this video while the game is on, so you probably have to understand how important this weekly review for me if I'm doing that parallel to the game. So, once again, good week. This is the weekly review for the second week of October 2012. Last week was very boring until the last days, and Friday's news, well, the unemployment rate reduced dramatically in USA, and more than 100,000 new jobs added to the market once again. I'm wondering how could it affect the market. Well, I published a post on the blog, which I don't know why and how it's possible to get these numbers. Many things could be there. About intervention, well, that would be really dramatically if the Chicago guys did that. I don't think they did. Probably there is something inside that caused that, but it doesn't matter because that's what we have. We could discuss about it as much as we want, but that's the reality, and that's with this situation we have to go. Now, there is something that we have to remember about. Well, the most important pair, probably the euro dollar, and about the euro itself. The situation in Europe is not good as well, and well, even bad. Now there are rumors about Greece find the solutions and Merkel to visit there, and then that Europe will now be one financial zone with one financial budget. All this kind of talking, especially during this weekend, all is good. But there's one thing to remember, and that's that um, expensive euro is bad for the economy. Is bad for the European economy, and that's why I think that the euro dollar cannot go longer for to gain strength. I think that is just impossible fundamentally. I'm not talking about technically. I'm talking about fundamentally. It's impossible. The European, in order to really have a real uh, recovery, they have to have weak euro, and that's what probably they will do when they will feel the pressure. I kind of feel that the current rise up for the euro is more than a trap. Um, I guess many traders will talk about a rise if it breaks 132. I think if it will break 132, that's exactly where the trap will come, because I think 134, 135 could be the top of the top for the euro dollar. That's my opinion about this pair. So I keep very bearish opinion, and let me show you the daily chart. The daily chart still has nothing. Could go and create a double top around the 132, maybe a little bit lower. Could be wonderful double top with a divergence and then a crash, right? Very possible. But it also could be a potential rise up to 132 or even 134. Very likely. And if we will look, well, first of all, 130, why 132, 134? Well, that's the areas, as you can see, right? It's pretty clear. Now, if we take a look on the weekly chart, what do we have on the weekly chart? We have a band to band move. We have still RSI above 50. The only thing we have to pay attention to is the stochastic. And the stochastic is already overbought. So I guess that's a band to band. It's pretty wide. So I guess it could go and play a little bit higher than the Bollinger Bands, maximum to the half of that, which is 136. But from here, and with the real bearish hidden divergence on the long trend here, I think it's only a question of time until the euro dollar is making the whole cover down back to 127 or probably even back to 125. And that's why I would say, starting from the double top all the way higher to 134 approximately, that's time to watch for potential sell for the euro dollar. And that's exactly, well, I can confirm my opinion by the idea that the euro dollar is creating exactly the same against everything. Pay attention to the euro pound. That's a bearish pressure. We could go for a divergence there. Pay attention for the euro yen, right? See, exactly the same. Pay attention for the extreme euro Aussie. Pay attention for the euro Canadian. And that's everywhere. That's why I think something is about to happen with the euro dollar. And if they will try to push it up, my opinion is that it's going to be a trap. I might be wrong here, but I think fundamentally, in order the Europe will keep recover, they must take the euro dollar down. That's the main. And I think double top is available, is potential, maybe a bit more, and then bam, we are going to have something between 600 to 1,000 pips down move for the euro dollar. That's why I think get ready. Something big is about to happen. Well, I mentioned the euro dollar, I mentioned all the rest, euro CAD, everything. I think they are exactly the same. Yes, they could push a bit higher, but there is a divergence already, and it's only a question of time until we get the full down move there. That's my opinion. Now, a very interesting pair to pay attention is the Euro Australian. It's very, very, very extreme, and there is no special reason for that. It happened because the euro dollar keeps rising. It happens because in Australia there was an interest rate cut again, third time after since April. But we have to remember that the interest rate is still in Australian favor, and it's not likely that in Europe they will raise the interest rate. So the euro Aussie most likely is reaching its top again. I was talking about that for a pretty long period now, for a few weeks, starting from 124, 125. And I said it could push to 128, it could push even to 130, but we are reaching a real extreme. On a weekly chart, we are almost band to band. It's pretty wide, and not just band to band, it's a band after a down move band. So it's all kind of straight here. RSI is aiming very, very strong up. True, very true. That's why I say it could push a bit higher. But we are now already on a hidden divergence on a weekly chart, and weekly stochastic is overbought. So I guess it's going to create a top here, maybe 128, maybe 130. It's possible. Maybe even the next top 134, 135. It's possible. But the bigger we go here, the bigger the crash down will be. The bigger the crash down, and we have a very strong bearish pressure here. We have RSI dancing above 80. Last time it danced for a long run. This is the third time it's dancing above 80. Last time it danced, it was when it was below, right here, and then we all remember what happened. Now I don't think it's going to happen all the way down like crazy back to 118 again or something like that. But I do think that we are going for a real retrace. Now pay attention. We have had 20 candles right up to here. So the higher we go, the lower we go. And I say that this area, the 125, will be at least the area that will be retested. Most likely, it's going to be 124 and even below again. And the same exactly, just opposite, with the Aussie franc, which is moving real straight down. Now it's creating duplication. It can go for one more duplication. We have a real bullish pressure here. RSI is dancing on the bottom. We have real support range right here. We have the next one here. We have the next one here, and a weekly chart, very important as well, is going and creating here a potential band to band, crazy band to band, because it's wide to wide. And of course we can see that there is a potential bullish hidden divergence. That's why I think we're coming to a very, very, very bottom. Even though it looks like a crazy down, that's exactly what's going to create the bottom. Of course I don't think it's going to be like that. I think it's going to play around for several days. Probably on the next reviews I'm going to discuss about that more. But we are reaching here, as I said, a real bottom, and something very bullish is going to build itself right here, build the bottom, and cover the whole way back. Well, something like 500 points or so, maybe even more. Definitely worth to be in this pair, the swap is with us. From my point of view, great opportunity. Another interesting pair to pay attention is the Aussie Kiwi, which is dancing now around 17 candles straight move on the Bollinger Bands. I still think it could push a bit lower, so something like 123 maybe. We are reaching a Bollinger Band duplication on the 4-hour on the weekly chart. Sorry, we have a continuing divergence on daily. So even if it pushes a bit lower to 123 or so, there is a continuing divergence. There is RSI around the bottom. It's going to build the bottom around this area and push all the way back. In my opinion, the final target for this pair will be this trend line. So it's going to be, it's going to play something around like that and cover the up move right after that. So that's why I think we are just in front of several hundred points up move for this pair, and I think that's a really great opportunity. About the euro pound, I am going back for the euros. Well, the behavior is a bit weird here. I hope the pair could reach the 082 or higher, because around 082 or higher, that could become a perfect sell. On a weekly chart, that would be the head and shoulders. You see that? That's an inverted head and shoulders that could push higher to above 082 plus. Maybe even 084. Maybe 084. Then that will be the weekly head and shoulders target. And then something big is about to happen. Should we go and buy now? Well, I would not do that, as the bearish divergence is here. And the bearish divergence, once it is there, it could affect any moment. We don't know exactly when it's going to happen. But when it's there, it could happen easily. That's why I would wait at least for 082, and if it reaches that, look for sell opportunities. And 084, I guess, would be the last area. That's about this interesting pair. Few words about the Aussie dollar and New Zealandian dollar. They both are breaking some daily, as we can see, Bollinger Band. There is still stiff support that was not broken. The pairs could push lower. There is a room, both New Zealandian dollar and Aussie dollar, to push lower. And as I said on the previous weekly reviews about the New Zealandian dollar, we are aiming this bottom of this price channel. At least, maybe even more. So there is a room to go down. Keep the bearish trade. Keep the bearish opinion. As long as the last high holds. That's my opinion about these pairs. Few words about the dollar yen. Well, the pair has a real stiff trend line as a resistance here. It could be a wedge breaking out of that, and I would even protect with a breaking above the 79. If the pair managed to hold above the 79, it could gain the next push up back to 80 and 81 most likely. But again, it has to break out of this wedge and above the 79. It has to do it. As long as it does not do it, most of the chances the pair will still moving around the same range. Gold and silver. Well, I must admit I'm a bit afraid about that. From one side we have more than 20 candles right, means it has to push down to the lower band. From other side, on weekly chart, it looks very bullish, and it could cross up again and push it back to 1800s or even 1850, and then we'll get more than 20 candles right. Of course, I think it all will be limited because the bearish pressure is clear, and when the right time comes, it all will cover it down back. But as for now, if it will not break below, I would even say here below 1770 at least on the next few days, that's a warning sign, and that's what could take the gold higher above 1800 again. Same with silver, which could turn bullish here and push back to 35.50 or even 37 to continue the daily divergence before it's making the hold down move. So I'm very cautious now with the commodities. They could easily push up, and based on weekly chart here as well, it seems like a double, triple dodgy and a push up again. So there is a room to go. That's what I try to say. There is a room to go. I still think that on longer run, even if it pushed higher, the crash down will be stronger. But still, there is a room for that to go higher. A few words about the indices and the Nasdaq and the Dow. Well, I'm waiting for a close below the previous support, or at least a reliable candle pattern on weekly chart. So far we did not get none of them, and same with the Nasdaq. And about the opinion, could it push higher before it crashing? Yes, definitely yes. But as I said not once, I think something bad is going to happen with the indices. I don't know what, I don't know why, but looking on the weekly divergence, looking on the monthly divergence, I don't see very bright future for indices, for American indices. I hope I'm wrong, but that's what I really think. And the last thing that I would like to finish with is the soybeans. And the soybeans has here a very interesting trend line, as you can see right here. Right, very interesting trend line. It could push a bit lower. Well, it has a longer trend line, but it's very lower. We have a bullish hidden divergence forming, so that's why it's not on the stochastic yet. That's why I say there is a room yet to play until this bullish hidden divergence will be completed. And I suggest pay attention on the daily chart. I guess it could push higher, but then another push down, maybe to the 200 moving average, maybe even bit lower. And when the combination of the daily chart together with the daily bullish divergence continuing, which is it right now, with the weekly bullish hidden divergence, when it will be combined together, then we are going up. So get ready. That's what I'm trying to say. Get ready. It's about to happen within several days or weeks. So that's my trades for the upcoming week, my friends. And well, there are a lot of opportunities. Pay attention to the euro pairs. They seem to be really overbought. And as I said not once, I guess the euro dollar is really overbought. And especially fundamentally, as fundamentally there is no real reason for strong euro. In order to recover from their crisis, if we can call it this way, the euro has to go down. So that's all for this week. Thank you very much for watching this video. I wish you a wonderful week, successful trading, and I'll see you next week. Good luck, Vladimir.